Good afternoon, traders. This is a live trade recap. This is day number 2 and trade number 3 of the small cap test, and boy, was today a doozy. So stick around because I think you're in for a real treat on this trade. This might be one of the best trades that I've ever recorded. Not to say that it was the easiest trade or anything like that, but you just wait and see, and you'll see exactly what I'm talking about. So let's first take a look at the screener. It's a very exciting trade, I think. As always, I start with my small cap screener in this case, because we're doing the small cap test. We're just using the textbook definition of what a small cap is. Stocks that are in a market range of $300 million to $2 billion and market capitalization. The price range is $5 to $100 per share. Then I organize the list by volume. And one of the criteria is that it must be on the very first page, and admittedly my first page is a little bit smaller on my laptop, so it's not quite as many stocks as you're seeing right here. But you can see that there is a lot more red than green, and there was even more at the open. There was only really TMC and then eventually BBIG that was green, and then BKSY was not on the first page the entire morning, and then later on I came back to it and there was a 2-hour trade there. I'll show you that as well. But the big trade that happened today was with BBIG. So let's look at I actually have 2 videos here because I did stop recording at one point. I'll show you why. And then I got a price alert on BBIG that I set this morning. And considering that it was the #1 volume stock, the setup was exactly what I was looking for. It seemed like I had to take a trade on it. So let's take a look here. So here I am just kind of going through the stocks on the screener. So you can see I did have BKSY in the morning. And then, this is right near the open, like 5 minutes after the open. And then what I believe happened is the volume wasn't really there. In fact, when I pulled it up, the volume wasn't there. It didn't have the 500,000 shares required. I was just kind of checking it on the daily chart and seeing if it does eventually meet my volume requirement, will it meet my chart requirements, that kind of thing. And you got to be careful with that. If you're a new trader, you might be teased into taking a trade on a stock that does not meet your screener criteria. What I mean is maybe your volume criteria is not met, but you see the pattern that you love to trade and you take a trade on it. So be really careful with that. If you don't feel like you have the discipline to avoid that, then do not put a stock on the chart until it meets your volume requirement, because that will get you into a lot of trouble. Because what happens if you take the trade, it fails, and then you say, you know what, that didn't even really meet my requirements to take a trade because it didn't have the volume that I'm looking for. So, and you can see eventually I did remove those stocks. So I was just putting out lines kind of if they did eventually meet the volume requirement. So let's see. So yeah, TMC was really the only thing up for the majority of the morning. And here's BBIG finally, I guess, popped up on the screener with enough volume and percent change. Sorry about this. Let me just fast forward. So yeah, it looks like I took it on and off because it had the volume, but it did not have the percent change. It was somewhere around 2%, and I'm requiring 5% or more. But eventually, as it got near its previous session high, it did have the percent change. It was somewhere around 6% up here near its previous session high. So BBIG, this is the one that I did eventually take the trade on, but you're not going to see it in this video. What you will see is that you'll see when it broke out through that previous high, which I believe was 873. So let's take a look at it breaking that previous high. This is like kind of the first signal that I need to watch this stock when that happens. Before, when I was trading the mid caps, this is my signal to look for an entry. I would wait for the price to break out over that previous high, and then I would take an entry on the first pullback. I'm not doing that anymore because that didn't work out very well on the mid cap test. The first trade was very likely to fail, about 70% chance of failing. And I only found that out after taking 100 trades. So that's the thing. And, so basically I decided not to take that trade with the small caps because the small caps are even more volatile and less reliable than the mid caps. Excuse me. But this is the thing about recording your trades, tracking your trades, journaling. I hear so many people and so many YouTube videos say that, oh, this setup has an 80% chance of working out, or this setup has a 75% chance of working out. I've never ever seen anyone pull up a spreadsheet and show that they've tracked that setup for 100 trades or even 10 trades. 10 trades wouldn't mean anything, but you have to at least track it for 100 trades, figure out the percentage, because not only are you going to find out what's the percentage of that pattern working out, but what about considering the circumstances of you as the trader and everything else that is involved in your trading system and trading plan. So that's the only way anyone can really say that this has an X percentage chance of working out, is if they tracked it themselves. Reading it in a book or hearing someone else say it doesn't mean anything. So now we have a breakout over the high of day. So that first, I'm sorry, we don't have that yet, but that's what we're waiting for. We have a breakout over the previous session high. Now I'm waiting for a breakout of the high of day. The high of day is 875. It's the second yellow line. Yes, it's very close to the first signal that we were looking for, but it still makes a really big difference on the entry. You are taking a trade when the stock has shown a lot more strength in this case, and you'll see that in the next video that I'll show you. I'm in this same YouTube video, but I have to scroll to the next video. But let's just take a look at what else happened on this video. So I actually marked out where I was marking out where the trade was going to be if I did do that first trade, but I'm not even sure that I followed up with that because something else happened. I'll show you in just a moment. It doesn't really matter though if that first trade worked out or not. It's just kind of a for fun thing that I'm tracking. But I know, with my mid caps that it only worked out 3 out of 10 times, which is just not enough to be profitable. So here is BKSY that finally popped up on the screener at 10:18. It was up at very early in the morning, then fell off. When that happens, I have to take it off my chart page. That's just part of my plan. That way I'm not just trading random stocks and just looking for anything. But you could see that BKSY did take off and did give a 2R trade, and I'll show you that in just a moment here. Toward the end of the video, I marked that out, and I pull it up on one single chart view so you could see it very clearly. So let's see here. So here, this yellow line, which looks kind of red because there's also a stop loss line in there. This yellow line is the previous session high. It obviously broke out above that. So then my signal to look for an entry would be when the new high of day has been broken, which I'm not sure why I have the line here at 1198. I mean, this is not the one I took the trade on, so it doesn't matter that much. But something weird is going on there. But this is really the level that needed to be broken for me to look for a trade, and then I'd have to get in on the first pullback. So I would say ignore that 1198 line. It should be somewhere around 1194 or something. And then the first pullback happens on this red candle. So my first entry would be not my ideal entry as far as if I had my, everything kind of happening perfectly as it should in my mind, but according to my plan, this is an ideal entry. It just doesn't look as good maybe as what I would prefer, is like multiple red candles and then get in. But the plan just says as soon as there's a pullback, you have to get in as soon as a 1 minute candle makes a new high, and it would have worked in this case. So here's the pullback on the red candle. And it seems unfortunate that the next candle broke through. That would have forced me to take an entry there at 1214. That would have made my stop loss at 1188. And then my profit target was hit. It was something like 1213 was the entry. Let me see here. I'll show it to you in just a second here. Here's where the profit target would be based on the all or nothing 2R trade. 1263, and you can see that obviously got hit without stopping us out, so that would have been a successful 2R trade, and this is now at 1025 basically. So here I was ready to shut it down, because whenever I find a 2R trade that I would have taken but I missed, I stopped trading. But this one was really debatable because I don't think this was on my screener when it gave me the entry signal. It just was something that popped up after the fact. So that was kind of, in my mind. And then what happened as soon as I stopped this video at 1025 is I got a price alert on BBIG, which was the one I was watching all along. So I started recording again. Let's take a look at that video. Let's see what time, 1028. It's now 3 minutes later. And here you could see that I had a price alert set for the break of that second yellow line, which is the break, well, that's the marking out the high of day. So the first yellow line is marking out the high of the previous session, which needs to be broken. That's step one. And then step two is the high of day needs to be broken. And that is my confirmation of real strength in the stock. So, and again, I don't look at this stuff, or this is not part of my plan, but I also noticed this really nice W pattern here, which is a signal that things are going to take off. So that's just a nice little bonus, but that's not part of the plan. I'll show you exactly where the plan is met in just a moment. So now this thing's taken off. It broke out through the high of day. So now I just have to wait for a pullback. Once I'm in the trade, things get really interesting. So definitely stick around past the entry. So now I'm just waiting for a 1 minute candle to make a new high. It looks like it happens on this current candle. So let's see here. I think 879 or 880. 880 was what I was looking for. And you could see how I triggered my entry as soon as 880 appeared. Let's watch that bubble. Here's 880. You can see I triggered my hotkeys. The price was moving around a lot at that moment. I got in at 881. It's only 1 cent slippage, not that big a deal, especially on a stock of this price. So it should not affect things. But the difference is the profit target in this case is 901, and it would have been 899 if I would have gotten that 880 price. But let's see what happens here. So here I'm using my 2-hour calculator, super convenient. If you're interested, go to patreon.com/tradingarmor and you can download this calculator at the very first tier level. So pretty cool. And then let's take a look at what happened. So now I'm in the trade. I've got my so also this is a super important reminder is make sure as soon as you've executed the trade, grab that stop loss and move it into position very quickly, because especially in a stock like this, there's a ton of volatility. You could get flushed out right away, and you much rather get stopped out at your correct stop loss than say 5, 10, 20 cents lower. So, or you might even, who knows, if you missed it, you might not have the discipline to take the stop at that point, and that's even worse. So anyway, I got the stop loss in place. So my profit target is 2 times the risk. There's a 10-cent risk here. So our profit target is 20 cents higher. And this one, of course, I just did it in my head, and then I plugged it in the 2-hour calculator. Never a bad idea to check your work. But when you get some like really weird risk levels, like maybe your risk is like 37 cents and you're in at 742 or whatever. So that's when that 2-hour calculator really comes in handy. Now watch this. Watch what happens here. It goes to 9 cents. I'm sorry, $9. My profit target is 901. So if I wasn't a disciplined trader, I would probably have pulled this target down and taken, maybe 1 or 2 cents off of my trade. And instead of getting a 2-hour trade, you get a 1.9 or 1.8 hour trade or something like that, which is not good, because in the long run, that's going to not only eat away at your profits, but that could cause you to be red. In fact, it most likely will cause you to be red, because there's very little margin of error in trading. And yeah, you can see here now I'm hovering over that candle. It's actually showing that it did tap 901, but it obviously just barely got there. And I'm selling to the bidders, so the bid needs to come to 901. This was probably, the ask was at 901, and the bid has to come to 901 in order for me to get filled. Plus, I'm sure there's other people that were probably in line to get filled at 901. And you might want to blame this on Webull, but I can guarantee you that this sort of thing happens all the time in other brokers like Lightspeed and TradeStation and definitely Thinkorswim. It's not a broker issue. This is just the way that orders work. As I said, the bidders have to get to 901. So typically the price has to go above your target in order to get filled, or there has to be just a ton of liquidation or liquidity around that 901 level. Like the price needs to oscillate there. Here you can see it just kind of went up, tapped, and came right back down. So I'm not surprised at all that I did not get filled there. Now, the most important thing, if you are trying to become a successful trader long term and be a disciplined trader, is not to do anything in this moment. Just let the trade play out. Of course, there was a good chance that this thing could have come down and stopped me out, and I had committed to stop trading at that moment if that was the case. That's not the case here. But if that happened, if I got stopped out, then I was going to stop trading for the day, because my trade did work technically, And obviously I would feel very frustrated if I got stopped out on this trade. And what do you think happens when you're frustrated and you keep trading? You are very likely to break your plan or take bad trades. So it's actually written into my plan, if something like this happens, if this stops me out, that I have to stop trading. So I would be breaking my plan by just continuing to trade anyway, even though normally, under normal circumstances, I'm allowed 3 trades per day. But in this scenario, or if my first trade wins or second trade wins, I have to stop trading anyway. So that's the plan. So now let's take a look and see what happens here, and imagine yourself in this trade, the frustration you would feel and what you may want to do in this situation. Maybe you would bring your stop loss up to break even at that point because you saw it get so close to your profit target and come back down, and you say, you know what, I'd rather just take a break even than risk this thing stopping me out. And you bring your stop up to break even, and you would have been stopped out at break even, probably a little lower because it came down pretty hard. So you probably would have caught a little slippage on the way down, and you would have taken a small red day. So let's see what happened just because I stuck to my plan. So I'm going to fast forward this a little bit because it does take a little bit of time to play out here. So you can see tons of oscillating price action, sideways movement as some call it. And now we're seeing some strength again. If this, look at that. So you see some strength, then this thing comes back down, super frustrating. You know, okay, now this time I'm going to bring my stop up to break even, or I'm going to follow this candle up or whatever. And either way, you're going to end up with a lesser trade, guaranteed. And let's see what actually did happen. Again, just because I stuck to my plan, just because I left my orders alone, I just let the original trade idea play out to completion. There's only 2 possible outcomes. Either my stop loss gets hit for a -1R loss, or my profit target gets hit, as it just did there, for a 2R gain. And this is the value of just sticking to your plan. How frustrated would I be if that happened and I did not stick to my plan? So luckily, that is the way things worked out. And I'm ending the day up 2R. And again, this is just test trading. We're just trading one single share until we've traded 100 trades. And hopefully that makes sense to you, because why would you trade full position size until you've proven your strategy, proven your system? Remember, doesn't matter what anybody else says. Nobody knows the percentage outcome or the probability of a setup working until they have tracked it themselves with 100 trades or more. So I highly recommend doing that before you go full position size on any strategy, on any system, on any setup. So if you have any questions about this trade or any others, just let me know. At the end of the week, I am going to show my spreadsheet. I'll release that video on Sunday. We're going to go over the results of the mid-cap market test, and we'll also go over the results so far of this small-cap test. So we've only done 3 trades with this so far. We did 101 before with the mid-cap market test, so those results are very meaningful. And I think you're going to learn a lot in those videos where we go over the results. So look out for those on Sunday. I will be trading again tomorrow morning, looking for another small cap trade. So there will be another video tomorrow as well. As always, go into every single trade with a plan and stick to it. And no matter what, always take your stop losses, honor your profit targets, and in the long run, you should be green. Take care.